Okay, this is the closing cost video that we're going to go over line by line, all the fees associated with a mortgage.
This is the closing cost worksheet. The information that is put on this worksheet, which we're going to go over in detail with you, is transferred over onto the good faith estimate. So these are the key points to look for.
Okay, in this example, this is a purchase closing in the month of July with a loan amount of $125,000. Line item number 1 is a processing fee, right around $500 for that, typically.
And a processing fee is for the processor to gather all the paperwork together, get it ready to submit into an underwriter.
Second line item is an underwriting fee. We have $899. It's going to vary anywhere from maybe a low of $7 up to maybe $1,000, $1,100. I've seen them.
And some of the lenders will include in that fee. There's other things that, like a tax service fee,
right,
like a flood cert fee. There's other little fees that sometimes are included in that.
All included in there. Next item is the appraisal fee, anywhere from the high 300s to the low mid 400s on average.
And of course, this is the value of what your home is worth.
Next item is the title search, which again is a title fee, $125 on that.
That is for the title searcher will go to the county clerk's records and they check the title to the property to make sure it is clear over the last 100 years.
Next item is the settlement fee, again another title insurance fee. This example is $500. It's going to vary title company to title company, and average on this would be about $500.
And that's basically for the person to sit there at the closing table and they prepare all of the documents and then they tell you what each document is and tell you sign here, sign here.
Next item is the title insurance fee, again around $325 on this example.
And on this example, it's $325 because it is a purchase. Bear in mind, this is totally related to your loan amount. And if this is a refinance, that figure will adjust tremendously. And what title insurance is title insurance is insuring the lender in case the person who did the title search either missed something in the title search or maybe something was recorded afterward,
right,
or so
title
that
defect,
or prior to the 100 years.
Right. Next item is your recording fee. That's a government fee based on the number of pages on the mortgage. Typically it's around $225, $230, right in that ballpark, depending on the number of pages involved on that mortgage.
Right. It's just something like $20 for the first page and $10 for every page thereafter, that kind of thing.
Next is the another government fee. It's doc stamps and intangible. They're a percentage of the loan amount. So that's going to vary depending on your loan amount. In this example, it's $687 and some change.
And those are state of Florida fees.
Correct. Last item is the survey fee. See it anywhere from $275 to $350, right around there. I think we have $295 in our example.
And of course, a survey is something that you are also going to want on your property. That tells you exactly where your boundary lines are. If you want to put up a fence or put in a pool or things like that, you're going to need your survey.
Total of all those numbers are $39.76, just a touch under $4,000. Great example on a $125,000 loan amount. Your closing costs are right at $4,000.
Again, nothing outrageous, just a lot of little things that add up.
And keep in mind the seller can help with that too. We talked about that in the previous video.
Moving on to your prepaid items or your escrows that we talked about. I'm going to skip the first one, which says interest. We'll get back to that in a second. The hazard insurance premium you can see on there for $1,200. Again, this is an assumption. This is guessing. Whatever your insurance company has quoted you based upon what type of construction your home is, where your home is located, how old it is. Those are all of the factors that go into determining what your homeowner's insurance premium will be. The premium will be collected at closing for the first year. In addition to that, the next line item, you can see it says hazard insurance 3 months. They're going to take whatever your annual premium is and they're going to divide it by 12. There's 12 months in the year. They're going to divide it by 12. In this example, it's $100 a month is what your homeowner's insurance is. Now, they're going to collect 3 months at the closing because on all loans, you have to skip a month before you start making mortgage payments. So in this example, like we said, we're closing, assuming we're closing in the month of July. You will skip August and your first payment is going to be September 1st. So with your September payment, September, October, November, December, all the way through until next June, they will collect $100 a month. Well, that's 10 months. From September to June is 10 months. So they will get the bill for $1,200 next June. Well, you've only made 10 payments, so they only have $1,000 in there right now.
That's why that cushion's there.
They have to collect the other 2 months to make up the full year at the closing, and they always have a 1-month cushion. That's where the 3 months comes from. Following that is property taxes. Same thing. You see in our example, we have 11 months figured out here. And that's because, again, assuming we're closing in the month of July, you skip August before you start making mortgage payments, and your first mortgage payment is September 1st. On September 1st, they're going to take your annual taxes, they're divided by 12, they add that into your payment. You're going to make your September payment and your October payment. November 1st, they're going to get a bill for 12 months worth of taxes. Well, you've only made 2 payments so far. So they have to get the other 10 payments at closing. And again, they always charge a 1-month buffer in case the rates go up. Getting back to our prepaid interest, if you go up to the top of the prepaid items there, it says interest for 5 days at $16.49. In our example, this is interest on your loan per day.
From the day of closing till the end of that calendar month.
End of the month. So we are under the assumption in this that, first of all, we used an interest rate of 4.75% and $125,000 loan size. That gives us a per diem interest per day of $16.49. Remember when I said you always skip a month before starting your mortgage payments? That's because of the prepaid interest. When you make, all mortgage interest is paid in arrears. When you make your first mortgage payment September 1st, you are paying interest on the month of August, from August 1st until August 31st. When you make your October 1st payment, you're covering September's interest. When you make your November payment, you're covering October's interest. You are always paying interest on the month behind. That being said, if we close in the month of July, and your first payment is September 1st, your September payment covers August interest, but you got the money on July 26th. So from July 26th on your closing date, from July 26th, 27th, 28th, 29th, 30th, 31, 5 days interest is going to be charged on the closing.
Okay, we know that's very confusing. It's a lot to digest. If you need any help with that, please, by all means, that's what we're here for. We do this every day. Call us, email us. Let us know how we can answer some questions for you on that.
Happy to.